Good afternoon, ladies and gentlemen. Welcome, distinguished guests and investors. We will do this in the following form. I will introduce the startup, I will introduce the presenter. Afterwards, we are going to a video pitch. And after that, we are going into a live Q&A.
Hi, my name is Martin. I'm a mathematician, veteran quant and hedge fund manager, and the founder of Morpher. Morpher empowers its users to trade stocks, commodities, and currencies with zero fees and infinite liquidity. In 2018, I've teamed up with Stanford engineer Dennis Bykov to found Morpher because we both believe that electronic trading is fundamentally broken. It is burdensome, it is costly, and it is unfair to trade the markets today. Here is the process. So let's assume a trader wants to invest in the S&P 500 stock market index. They first have to find a bank, then a broker, then an exchange, and there they can buy the certificate that represents the tracking of this index fund and is provided by yet another company. So there are 4 companies standing between the trader and their product, and all these companies are middlemen that charge fees and can potentially default on the trader or investor. Now, individually, these fees don't sound like much. It's just a few dollars here and a few percent there. But collectively, these middlemen in finance make one of the biggest industries in the world and generate revenues in excess of $250 billion a year in the US alone. But on top of being costly, retail traders face other limitations. So they usually have a very hard time to short the markets, because they can only short their stocks that their brokers make available to them. They have a very hard time to diversify their portfolio with markets that are not correlated with the stock market, such as commodities, and they can only trade during regular business hours, Monday to Friday, 9 to 5. But that's not the only problem. Also, institutions face some problems, like, for example, the lack of liquidity, and that's best represented here by this order book of depth chart. The green curve represents anyone who is willing to buy that asset at the moment, and the red curve is representing everyone who's willing to sell that asset at that point in time, plotted against the price of the asset on the x-axis. So you can see the more you want to buy from that asset, the pricier, the more expensive it becomes. And that effect is called slippage and cannot be avoided on any two-sided marketplace on the planet. It's simply always there. And institutions suffer from slippage way more than retail traders because their order sizes are usually very big compared to the liquidity of the market. So to sum it up, the problems with electronic trading are there are expensive middlemen that need to be compensated and can potentially default. Markets are usually not liquid enough that large orders can be filled immediately. There is limited access to many asset classes for retail investors, and it's oftentimes not very easy to short a market. Now, if it's all that burdensome and costly, we've asked ourselves, why do people trade in the first place? And the answer is people are looking for financial returns when they trade. At least 95% of all trades globally happen because people expect returns, and only 5% of all trades happen because people want actual control over the underlying, like controlling the stock and to have a say in the annual shareholders meeting, or to physically control a commodity. 95% of all trades happen purely for profits, so just for the returns. And that's why we can fix trading and investing, at least for 95% of all traders, by creating virtual copies of the markets on the blockchain and providing anyone with free access to these virtual copies. And that's what my company Morpher does. We have created a smart contract protocol that observes the prices of real world assets like gold, Apple, or Bitcoin in real time and replicates them on the blockchain. And via our own cryptocurrency, via the Morpher token, our users can place bets on the price development of those markets and thus replicate the economics of trading the stock directly. Here is how it works. If one of our users has 100 Morpher coins, they could, for example, invest them in the Apple stock. The smart contract observes the price of Apple. Let's assume Apple goes up 10% and the user wants to redeem. Then the smart contract simply mints or creates 10 new tokens for the user to settle the bet. If Apple goes against the user 10%, then 10 of the 100 initially staked tokens are burned or destroyed by the smart contract permanently. So there is no counterparty anymore other than the smart contract that can mint and burn token for the user. This comes with a lot of nice properties for trading. And first of all, there are no costs anymore because there are no middlemen that need to be compensated, like brokers or banks or exchanges or index funds. So trading becomes free. Trading, all that it takes right now is a user places an instruction into a smart contract, and that doesn't come with any costs. Then second, global assets are available on one single platform for the first time. You can trade stocks, commodities, currencies, and Morpher can even create markets that simply do not exist as a liquid market yet, like for example, the prices of real estate in the city of London. Then traders on our platform trade with infinite liquidity. That means that every order that is placed is filled immediately, regardless of the time of day, regardless of the direction of the order or the order size. And that means that there is no slippage and no market impact anymore for the first time. There is also no counterparty, and that it might be the biggest advantage of them all. That means that traders on our platform do not depend on someone else wanting to sell at the same point when they want to buy, and that there is also no custodian and no one who holds their position. It's always theirs to control. So here's how it works in practice. We have created a trading application that we believe is intuitive and easy to use. Our users, this is the first view that you get to see when you open the application. It's a dashboard where you can see the markets that you're most interested in, the watch list and the biggest movers. And on the left side, you can see the assets that we support at the moment: stocks, commodities, cryptocurrencies, foreign exchange, and exotic instruments. Here you can see with a simple click on the chart how your portfolio is doing, so what the historical performance has been of all your trades on Morpher and which positions contributed to it. And if you want to trade, you'd simply select the market. Again, you get to see its chart, and then you just specify the number of Morpher token that you want to invest in that market. So you don't have to trade whole units, whole shares. You simply specify, and in this case, the user specified a 500 Morpher token to be invested into ADA, that's a cryptocurrency, and with a click of the mouse the trade is already completed, and the user has now 500 Morpher token invested in the price development of the ADA cryptocurrency. Now this begs the question, all our trades are denominated not in US dollars but in Morpher tokens, so what is the price of a Morpher token? And Morpher is a free floating cryptocurrency, just like Bitcoin or Ethereum, that can be traded on crypto exchanges. We are at the moment listed on Uniswap and on another centralized exchange, and soon new exchange listings will follow. And the token price is simply subject to supply and demand, so it is worth what a user is willing to pay for it. And that is at the moment, this morning, 1.8 cents, $1.8. And that implies with a total supply of 1 billion token that our market capitalization is currently slightly above $18 million with our Morpher token. Now, what is our business model? That's a question that often comes up because we do not charge fees for using the platform, for using virtual futures. And our business model is comparable to the business model of other cryptocurrencies like Bitcoin or Ethereum. We mint new Morpher token every day for the company. We create 0.015 of the token in circulation for the company every day, and that compounds to an annual revenue or inflation for Morpher of 5.6%. And that's comparable to how Bitcoin or Ethereum work, because there also, with every new block that is added to the blockchain, newly minted Ether or Bitcoin are created and made available to the miners. So this is a model that's proven to work in crypto. Our traction so far, we have onboarded 28,000 users. They are all KYC verified and use the platform. 10,000 of them are weekly active, and we currently grow at a 10% month-over-month rate. We are fortunate to be backed by some of the best investors in the world with Tim Draper's Draper Associates and the Austrian deep tech fund Apex Ventures. Between the two of them, we have raised a $2.5 million seed round. We're also alumni of StartX, the accelerator of Stanford University, for their best founders. And we're looking forward to raising our $5 million Series A in the first quarter of next year. With that, I say thanks for your attention, and I hope you enjoyed this quick introduction to Morpher. Thank you.
And therefore, I want to welcome Martin. Hi, nice to meet you. Martin, having heard this, what are the typically users you are now addressing? Firstly, in which form are you addressing them, and how much people have already engaged in the platform?
Yeah, so our typical customer at the moment is a retail trader, someone who is familiar with trading the markets, but not necessarily cryptocurrencies yet. That's one group. The other group comes directly from the crypto space. So those are our first customers. In terms of traction, we have at the moment about 30,000 people who registered on our platform and opened an account.
Current situation around COVID-19, I see there. Do you see some push for your business?
Yes, people have more time. They stay at home and have time trading or learning new skills. So that certainly has helped. But of course, it's a difficult situation for everyone, and people are very careful when it comes to investing their money in this time.
The next question is, what will you invest the Series A funds into?
Into international growth, primarily. We have identified already a few regions in the world that are particularly good regions for us. Those would be primarily Southern America and Southeast Asia, where our services are in very high demand. And we would use the funds to expand into those regions, but also to expand the market universe that we can offer to our users. At the moment, this is limited to US stocks and commodities, but we want to increase the scope and scale of our universe dramatically, and that requires a lot of funds.
Another time, the question, what are your main competitors?
We have a lot of competitors. I would say the main competitors are all in the broker space or in the trading platform space. So just to name a few, those would be mobile first brokers like the Robinhood app that is at the moment very popular in America. Those would be platforms like eToro here, or plus 500, so the CFD brokers. But it's also crypto trading platforms like BitMEX, for example, that offer their users to trade cryptocurrencies via derivatives.
Martin, your closing remarks.
Yeah, well, we want to really democratize access to financial markets globally for everyone. There are a lot of people in the world who don't have the privilege, like we do here in Western countries, to get access to global financial markets. And we want to enable them to have access and to be able to trade the markets with as little as $5.
Um, I open the questions for our last question. What differentiates you from Robinhood?
Robinhood is a regulated broker where people actually trade the underlying stocks directly, so they get to own the stock. In our case, we're a derivatives platform. That means we don't trade the underlying. We just give our users the same economic exposure to the underlying.
Martin, thanks a lot. We appreciate your
Thank you. Thanks
pitch.
for having me.
All the best. We see you later. Thank you.